Yeah, beautiful. So we've got a tax code that most people would know who's awake in the world. It's broken. We've heard a lot already in the current election cycle that there's a lot of conversation about tax reform. Well, we're really proud to say that there isn't a tax reform legislation uh, that has more independent third-party research and investment dollars that has gone into creating it than the fair tax. Like over $30 million has gone into creating this. Many of the country's brightest economists have been charged with helping to put together this piece of legislation, and it is simple, it is fair, and it is transparent, and we will demonstrate that tonight. And so what tonight is going to look like is I'm going to give you about a 20-minute overview of the main fair tax merits. Then we're going to stop and take questions. Then we will look at the Congressional Scorecard. Who's supporting this right now in Congress, and what's it going to take to ramp that up? And then we'll finish the call tonight by answering your questions. So as we move through this, we're going to talk about how the current tax code is, there's 7, let's just call them hurdles, challenges, or ways that it's broken. And the fair tax really solves all of them. So it's convoluted, it currently punishes growth, and it, what I say, inspires the wrong behavior. There's a lack of transparency, incredibly inefficient, impedes privacy, and depending on who you know and how much money you've got in your bank account, there's winners and there's losers. And so there's a real lack of fairness with respect to that. And, you know, it requires a lot of time and labor to be able to move through the tax system. So we need a better system, and we need it yesterday, and the fair tax really handles this, all 7 of these points, in a really powerful way, which we're going to talk through starting now. So as I mentioned, this is legislation. So I noticed on the line tonight we've got a number of people that have heard about the fair tax and have been here before. We've got some new people as well. So this isn't just some idea that came about over the last year or so. This isn't some fad. This is legislation that has been introduced and reintroduced to Congress several times. It's legislation that currently exists in the House and Congress and has several co-sponsors, which we'll talk about later on in the presentation. All right, so first and foremost, simple. The fair tax legislation is 131 pages double-spaced. You can go to fairtax.org, you can download it, and you could read through this and you can understand it, unlike most bills that move through Congress. So, I love the saying that simple is better. For me, sometimes, most of the time, when something is simple, it's better, it's more efficient. And, I believe, my opinion, and certainly you can weigh out for yourself as we move through it tonight, that when the tax code is simplified, boy, we've really got something to work with here that'll really make a difference for us. And the more layers you put on top of it, the more pages you add to it, like the 75,000 pages plus that are in it, the more convoluted it gets, the more loopholes there are, the lack of transparency there is, and the more broken really it becomes as a result. So we've got simplicity on our side. Now, our current tax plan, the income tax, punishes growth. Well, the fair tax supports growth. Now, think about this for a second. So the fair tax is a consumption tax, not an income tax. And you only pay taxes on what you spend, not on what you earn. So right now, the more money you make, or the more money a business makes, the more the government takes away. So at a very simple level, what you heard me say earlier is we're incentivizing the wrong behavior. At some point, people and businesses who make a certain amount of money say, yeah, I'm not really inspired to make any more or grow anymore because I'm just going to work harder, but the government is going to take the majority of what I create, and it's just not worth it to me anymore at a marginal level. So we want to create a tax system that inspires growth. And so when we remove taxes on income, taxes on capital gains and investment, we inspire more growth. And that's exactly what will happen under the fair tax, which we'll talk about in a little bit. So the fair tax eliminates all federal taxes and repeals the 16th Amendment, which is taxation on income. So let's look for a second at specifically some of the benefits that the fair tax will have on business and trade. Okay, so right now, it's estimated that about $13 trillion in assets, personal and corporate assets, that's monies, that's cash, that's investments, that's parked in offshore banking accounts, to shield it from capital gains and business and income taxes, will start to come back into the U.S. organically. It's estimated that $1 trillion will come back in the first year alone. Now, if you think about that, when you inject the economy with $1 trillion organically, not by printing money and put some dramatic inflation risk in play, boy, you've got something pretty big that's going to happen. See, what are business owners going to do with the money that they make as they grow? With the money that's sitting in offshore banking centers that they bring back into the U.S. They're going to do with it what they do best, what they know best, and that is grow their business. So, they could park it offshore and, put it in a very low interest bearing account where it's safe right now from Uncle Sam, or they can grow their business. And the rate of return that would occur in the latter is much greater than perhaps the interest they could make in an interest-bearing account, in some savings account. So, and look, I don't profess to know all the different financial instruments that wealthy people have occurring in offshore banking centers, but I am aware that a lot of it is conservative. And when you take the lid off of what's possible when it comes to growth, I know that business owners are going to invest in their businesses. So think about this. The U.S. becomes a corporate headquarter haven. So our effective corporate income tax rate will be 0. Companies will come over here. They will build infrastructure, buildings. Construction will be a boon. They're going to need to hire people and staff their headquarters. And that is going to be a huge boon for the U.S. economy. The underground economy is estimated $2 trillion. Everybody pays their fair share. Right now, only 50% of people actually pay taxes. Well, we broaden the base to everybody, right? So you've got all these incredible dynamics at play when the fair tax gets implemented. It's estimated that the average American's income is going to increase by 29%. And that will happen because instead of having gross pay and net pay now, where businesses withhold your taxes, you're going to keep 100% of that, right? So on average, the average American's income is going to go up by 29%. People are going to have more disposable income than they've ever had before. And what's going to occur when we've got more disposable income? Well, savings is going to increase. People are going to feel safer, and as a result, make larger purchases over time, such as houses and vehicles. People are going to spend more because guess what? That's what Americans do really, really well. And there's going to be more investment. And as that happens, you've got an incredible dynamic at play, unlike we've never seen before. So by removing corporate and personal income taxes and capital gains taxes, you create an epic economic explosion that will occur, again, unlike the likes that we've never seen before. So huge, huge opportunity for us, and huge opportunity for us becoming a corporate headquarter haven, doing this before another country does. I mean, look at Ireland right now. You have got U.S. businesses relocating international headquarters to Ireland and other countries because of their low corporate income tax structure happening at a huge rate right now. And their economies are really starting to pick up as a result of that activity. All right. So fully transparent, no loopholes. Only one tax. There's a consumption tax on new retail goods and services. That occurs to the tune of 23%. You're going to see that right on your receipt. Let me go back here for a second. So I'll give you an example. So imagine you go to the mall and you go and buy a pair of designer jeans, and the price tag says $100. Well, when you cash out at the register, you're going to pay $100 because the fair tax is included in that price, and that will be broken down. That shows the business took $77 while the national consumption tax took 23 of it, right? So fully transparent. Like, can you imagine going to the mall under this new system and having the jeans be $105 now and seeing that $26 or 27 or 28, whatever that number is, and the percentage being higher? Like, you're going to know. So right now, when Congress manipulates the tax code right and left all day long, but we never know about it. And it happens in shroud, and quite frankly, Congress wants to keep it that way. The moment we have this kind of transparency, they lose a lot of their power. And so when we shift to this very simple, fair system, you create transparency, we shift power from Congress back to the people, and there's no loopholes, guys. Besides education, there's no industry here that gets out of having to levy the fair tax. So it's a really, really good idea, and this creation of full transparency is a really big deal, and that's part of what we're fighting against, and we'll get into that in just a few slides. All right, so right now it costs the IRS 25 cents to collect every dollar. It's inefficient, guys. That's very inefficient. And the fair tax is going to collect from approximately 18 to 20 million businesses rather than 120 million households. That's 80% greater efficiency. Smart. That's intelligent. And so the way it will work is the states will collect from businesses, and 45 states currently collect a state sales tax. So we've already got infrastructure for this. The businesses each month will fill out a simple one-page form that says, here's my gross receipts, and we'll take 23% of that and we'll send it into our state sales tax bureau, who will send it on to the Department of the Treasury. So we've got a very simple and efficient system and an infrastructure that's already in place to make this happen. And when you think about it, when you get 80% more efficient at something, it's going to get better. Like, that's a really intelligent thing to do. All right. So let's just look at this for a second. The IRS costs $13 billion to run. Like I said, for every dollar that it collects, it takes a quarter to do it, which means it only collects 75% of the taxes that it should. The fair tax would eliminate the IRS. It's written into the legislation over a 3-year period. The IRS would be gone, and we are going to be a much more efficient revenue collecting country. And quite frankly, our privacy is protected, right? So the government doesn't know how much money we make anymore. You pay your taxes when you buy something, not having to fill out some convoluted income tax form. And the amount of time it requires for individuals and businesses to move through their taxes every year collectively is in the hundreds of billions of dollars when it's dollarized. Hundreds of billions of dollars when you factor how much time it costs collectively businesses and individuals to fill out their taxes. So all that goes away, guys, and businesses can just focus on creating a better mousetrap, right? Instead of being burdened by tax implications when they're moving through their business and creating new products and trying to make their products better. So all this efficiency is really, really valuable for businesses. And then, of course, we've got fairness here, right? You know, and right now, if you've got a lot of money and you could pay people to lower your tax burden, you know, you've got the Mitt and Romneys of the world in that class who's on a percentage basis paying less than many people who struggle. It just doesn't make sense. What makes sense is that you pay your fair share based on how you spend. And that's why the fair tax is really the only true progressive tax system that's out there. The other thing is what we call the prebate. The prebate assures no one pays federal taxation up to the poverty level. So what that looks like is every single month you are going to get a direct deposit into your bank account, a reimbursement for the amount of taxes that were levied on your spending up to the poverty level limit. So the Department of Health and Human Services each year put together the poverty limit thresholds. And what that means is they determine, based on how much you've spent in a year, how much spending you're operating at the poverty level limit. So if you look on the right side of the table, a family that has 2 adults and 2 kids, it's highlighted in green, the Department of Health and Human Services suggests that $32,000 is spending at the poverty level limit. You spend that or less, you're basically operating your household at poverty. You spend more, you're doing better than that. So by spending 32 grand, if you multiply that times 23%, the annual amount of taxes that you would pay is $7,369. Well, if you divide that by 12 months of the year, you get $614. That $614 gets direct deposited in your bank account at the beginning of each month, reimbursing you in advance for the poverty level spending that you've spent that month, right? And look, the prebate and the fair tax, for that matter, isn't biased. If you've got a valid Social Security number, you get this money. It doesn't matter how much money you've made. Everybody who qualifies gets it. Fairness. And this is really important because a lot of opponents of the fair tax will say things like, well, the fair tax really hurts lower income class Americans by adding a tax of 23%. Of course, they don't say that we're rolling back all personal income taxes, capital gains taxes, estate taxes, death tax, etc., alternative minimum tax. They don't say that. So the fair tax is a brilliant opportunity for lower income class Americans because you get the prebate, a new stream of income direct deposited every single month. You get 100% of your paycheck. You can choose to buy used goods because the fair tax is only levied on used goods. So if you buy a used home that's been lived in before, used car, used clothing, fair tax isn't levied on that. So it's really, really beneficial for all Americans, but especially lower income class Americans. So let's take a look at the impact on prices here. There's a lot of concern and debate around this. You know, people think, well, geez, if we're getting a tax of 23%, then prices must go up by 23%. And that's not true. That's not how it works. So let's just walk through it for a second. So right now, you got to think that understand that businesses pass off their cost to comply to the current income tax code and their corporate income tax is the consumer, and that's just reflected in the prices that we pay for everything at the cash register. We call that the embedded tax, and that occurs to the tune of on average 22% across all sectors of businesses. So the embedded taxes go away, and the fair tax of 23% goes on. Now, it's not perfectly clean. In the first year, it's estimated that prices could go up by somewhere between 10 to 17%. But over time, with competition, that's going to be reduced and come down to pre-fair tax levels, because market forces of competition will have competitors drive their prices down and people match it. And remember, even though prices are going to go up in the first year, the average income is going up by 29%. You're going to have more disposable income than ever before. You're going to be in a better financial position in year one and beyond with the fair tax, period. So really, really important to understand this. All right. So if we looked at it and we say, okay, we looked at the 7 big challenges that our current our current tax code raises. The fair tax eliminates all of them, right? It's simple, it's fair, it's transparent. It puts all individuals and businesses in a better financial position, literally in a better position. So why wouldn't somebody want that? Well, because you've got people whose income and power rely upon our current tax code, especially lobbyists and politicians, right? 50% of lobbyists in Washington are tax lobbyists, and if we eliminate corporate income taxes, guess what? We don't have a need for lobbyists anymore. So they're threatened, and of course politicians, we talked about this, they would love to keep the current tax code because they get to operate under a veil, right? And of course, the tax lobbyists who represent wealthy corporations to employ them, who also contribute quite a bit to these re-election campaigns, you know, these guys are in bed together, guys, and we've got to put an end to it. The fair tax, you know, really starts to level the playing field and make a big transfer of power from this Washington elite back to everyday citizens. So if somebody's opposed to the fair tax, you got to understand and ask yourself, what's their motive? Their motive is selfish, and that's what we've seen when we really get to the bottom of it. So we've got something here that can make a real difference for this country, and we've got to stand up and demonstrate what we support by our vote, and that's how we're going to get this fair tax passed. All right, so we're going to hit the Congressional Scorecard in a second, but before we do, we are going to head and we are going to take some questions here. I just want to check in with Larry and see if he's ready to go.
I am.
Perfect. All right, first question comes in from Rob. Rob asked the question, how would the following scenario look under the fair tax? A taxi company operates on a tips-only basis. Passengers are encouraged but not required to leave a tip for the driver. The company earns money from advertising dollars on the outside of the taxi. Since the company is not expressly collecting revenue from customers, how would the fair tax be collected for this type of company? Larry, you have a guess at that?
Oh, sure do. That's a complex question, but it has an easy answer. The fair tax does not care how the money is arrived at or where it comes from. It will be taxed when spent. So even though the taxi company or the taxi driver may be getting tips, when he spends them, he will be taxed. And insofar as the marketing of the signs go, If he is a legitimate business, in other words, he's got the appropriate tax exemption certificate from the state in which he is operating, he's a legitimate business, then he will not be charged tax for purchasing that sign to put on his vehicle. The money he gets from that sign we don't care about, because once again, when he spends it, he will then pay the sales tax, the fair tax.
You mean the tips, right? The tips, we don't care.
We don't care about any of it, because it's all income to the taxi cab company, the taxi cab driver. So none of that income will be taxed until it is spent. But what I was trying to point out was that the sign that is posted on the taxi, which he is getting advertising revenue from, if he purchased that sign and is not a legitimate business in the state, he will have paid the provider of that sign the sales tax for it. If he does have his sales tax exemption certificate, therefore proving he is a legitimate business entitled to the tax exemption, he will not be taxed on purchasing that sign, because he is using it for his business there to create income. But when that income is spent, it will be taxed at that point. If I confuse that, Mark, I'm sure you can straighten it out.
Yep. No, I think we've got clarity around it, and there's a dollar amount threshold where somebody really needs to declare that. So like if the taxi driver is independent, maybe this is probably an interesting thing to talk about for an Uber driver. So all Uber drivers or Lyft or Sidecar, what have you, they make a certain percentage of their fare. At a certain threshold, Larry, and I don't remember the number, is when you've got to declare it. Is it like $600 or is it thousands of dollars?
You're talking about the 1099 miscellaneous form. That goes away because that is an income tax related form.
You're right. I got confused for a second.
It's not hard to do for us, Mark. The income tax can confuse anybody.
That's right. That's right. Thank you. There's no income tax.
That's right. And no forms.
Yeah, and the taxi company, however, they're going to be required for the service that they provided. If somebody paid for the service, would they not be required to hand over a percentage of their service revenue? Is that correct?
Because as a business selling to the end consumer, in this case the taxi ride, they would be required to collect the fare tax, and it should be embedded in his rates, whatever they might be. And then each month he would be required to submit his tax return to the State Department of Treasury or whatever is the appropriate division in the state, and remit that tax. But the money he gets to keep for himself, he will pay tax on when he spends for himself.
That's right. If the taxi driver is operating as a business and collecting that money, he's got to and he's providing a service that happens at the retail level. That 23% of that will be handed over. If the taxi driver is renting the car from the taxi company, that is a business-to-business transaction. That is not taxed. So under the fair tax, only goods at the retail level will be, goods and services at the retail level will be taxed. Clear?
Clear.
Yeah.
The answer wasn't as simple as I thought.
I guess not. That's a good one. Thank you, Rob. And Rob, if we haven't made that clear for you, just please let us know and we'll dig in again.
Let's see if we can't butcher it some more.
Yeah. From Robert, will AFFT, Americans for Fair Taxation, publish a list of political candidates by state that will support the fair tax in the current election? So we're going to tell you the number of supporters tonight, which is going to be a really fast and simple thing to do. And you can go to fairtax.org to find out exactly who the co-sponsor is. The question mark for me is in the current election. Does the timeline remain the same come November, Larry?
I'm not sure what you say by the timeline, but come the end of December, when this session of Congress closes for the year, there will at that point be no more co-sponsors for the fair tax. When the new Congress convenes in January, the co-sponsors will have to, the fair tax will have to be resubmitted, and the co-sponsors will start re-adding from there. Most of them are co-sponsored as of the resubmittal date, because they get on board very quickly. Did that answer your question or not about timeline?
Yeah. All right, this is from MJ. Is there anything in current legislation that would require sellers to list sale price of jeans? So we're back on the jeans example that I gave. Is there anything in the current legislation that would require the seller to list the sale price of jeans? So it's $100, not $77, with higher price at register. So I think what MJ is asking is, are they going to be required to say, here's your final price on the price tag, but here's the breakdown on the price tag between what you'll pay in federal sales tax versus the price of the good. So if I'm understanding that correctly, MJ, that will occur on the receipt, not on the price tag. Yeah, anything else to add there, Larry?
Yeah, I was looking for it a little bit earlier because I saw the question in advance, and I'm almost certain that the legislation calls for goods and services to be priced tax inclusive, inclusive being the active word here, which says the retailer could not mark the jeans on the rack at $75 and then add the $23 fair tax at the cash register. It has to be on the in the price on the rack, and as Mark mentioned, the sales tax receipt will then break it down so you'll see exactly what the cost of the item is and the amount of tax paid. Mark?
Yeah, thank you. Would state sales tax be added on top of that, MJ? No. Sorry. State sales tax, yes, that would be added on top of that. But the fair tax, just to clarify, sorry, Larry?
Go ahead. I am not certain myself whether the state sales tax is added on the cost of the product or the retail price of the product. That's going to vary by states. That's really a state decision.
So we're saying, is the question, is it on top of, in the jeans example, $100, or is it on the 77? That's the question, yes?
Yeah, and I don't have a concrete answer because we don't know what the states are going to decide to do.
Got it. Yeah. All right.
I'm sure the constituents of the state could have a big say in that if they chose to.
Hank Van Geysen would like to know if any states have agreed to act as the federal tax collector.
That's a real easy answer, Hank. The answer is no, and the reason is because they have not been asked to yet, and they will not be asked to until the legislation is passed. There might be some informal discussions about that, but I've not heard of any to this point in time. Good to see you back, Hank.
Yeah, and I think that taxing the tax, the fair tax, would not occur. That the state sales tax would only occur on the breakdown of the price of the good. I don't know that to be a fact, but hey, we're talking about big piece of we're talking about some legislation here, and there's going to have to be some things ironed out, but that's what occurs for me, Larry.
Yeah.
All right. Josh asks, is the fair tax better than Obama's economic stimulus package? Well, I spoke to this a little bit, Josh, in the presentation. If you recall, the Obama administration injected the economy with $1 trillion, and that was not organic money. It was printed money. It was money from federal coffers, and there's a lot of risk in that, right? So you've got to look at it, the bigger picture here. If you've got businesses and business owners and people spending money at the retail level to make investments and to buy goods and services, that's real transactions that are occurring, right? So to simply inject the economy with $1 trillion and try to free up some credit, some lenders from offering more credit and creating more latitude on offering credit helped the economy, but will it have the same impact of Americans and businesses spending and investing real dollars that come from their own bank accounts? In my opinion, in my amateur economist opinion, not even close. So those are my thoughts. Larry, is there anything else you want to say about that?
No, I don't think so. I'd have been a little more blunt about that. Hell, that stimulus package was a boondoggle of taking money from the taxpayers of the United States, or in this case, borrowing a lot of it, and giving it to companies who were in the tubes because of either bad regulations they had to work under or bad management. And whereas the fair tax is actually a stimulator of activity, a stimulator of jobs and of growth. And so the two can't even be compared. They're not apples and apples. Mark?
Yeah. All right, this is from William. Why does the fair tax apply to term life insurance? It seems to me that it should apply to purchases that are made by the beneficiaries when they spend the death benefit. To tax the term premiums up front is double taxation, isn't it? Larry?
Yeah, well, I don't know how you see it's double taxation when you're not being taxed on any of your income. None of it, okay? So in the first place, you are getting your whole dollar that you earn. But if you think about it, the sale of an insurance policy, and it doesn't matter if it's a term or anything else, that premium has in it, built into it, the costs to underwrite it, the cost of commissions, etc., and cost of doing business in general. And that's a service being sold to you. So the premium is going to be taxed. However, your benefit, should you collect it, is not taxed. And it's just looking at it very black and white so that there's no complications in how to interpret what is and what is not taxed. If it's a sale of something to the end user, term insurance policy is going to the end user, then it's going to be taxed. If it is sold to somebody who's reselling it as part of some other package, then it would not be taxed. The premium would not be taxed. Mark?
Yeah, thank you. Ron wrote in, for the tax example, do the customers pay the fair tax? And the answer to that is, if the business, yeah, the answer is yes. The customers pay the fair tax when they pay their taxi fare because it was a service. In other words, it's embedded in the cost of their service. That's it.
Yeah, that's an interesting point, Mark. If the customer happens to be using the taxi because he's on a business trip, that would be a business-to-business transaction. He is going to be required to pay the fair tax in that example and take a credit for it at the end of the month, unless he is not using that as something to sell to the end user. If he's on a business trip and his company provides a service or a product to a company who adds that service or product to their product, then he would not tax them, and he would not be required to tax it on it, to pay the tax on it when he purchases it himself. Mark?
Yeah, thank you. All right, great questions. I mean, we're digging into some great stuff here, guys. So thank you for all the great questions you're writing in. In fact, let's do this. We've got a lot more questions here. We're going to get to all of them, so don't go away. Let's just move quickly through our special topic because it's a quick and easy one, and then we'll get right back to your questions.
Okay, Mark, if I can interrupt for just a moment, please. The very first question from Robert: will AFFT publish a list of political candidates by state, etc.? The list is published, but it's not by state, but it has the names of every co-sponsor and the state that they represent, including their district, I believe. And that's in a list that's either alphabetized or by the date within which they actually registered as a co-sponsor. And you can get that through popvox, popvox.com, or you can get it through the government printing office. Okay, Mark.
Yeah, now that you say that, I'll wonder if I went to the right site to garner this info, but you always know the number, so you can tell me if it's on or off.
Fairtax.org, you can get there too also, but you mentioned that one already.
So these are our numbers. Do you have different numbers, Larry?
No, those are perfect, and if you add the actual sponsor in each case, that gives us a total of 74 plus 7.
Yep. Yeah, so that's what we've got. These are the websites that I went to. I went to congress.gov and I looked up the bills, one in the House, one in the Senate. Yeah, so we've got a ways to go. Now, there's a number of questions in there, and there's a question that people always ask is, well, how do we get more co-sponsors? And the answer has been, will continue to be, unless we've got someone with a really great idea that we're all ears for sure, a grassroots effort. We need a minimum of 3,000 citizens in each district in this country to hold their hand up and say, I vote for the fair tax, and I will only vote for you if you co-sponsor this bill. And 3,000 happens to be a very special number because that's the number of constituents where congressmen and women say, well, I better pay attention to this. Like, you've got my attention here. So, yeah, more on that a little bit later as we finish up on some things we can do. But this is what we've got so far. As Larry said, at the end of December, I think this is correct, every 2 years the legislation is put to bed and then needs to be reintroduced, which it will be in 2017, if it's not passed by then. All right.
Okay, Mark, we got at least one hand raised that I see. I don't know if you've picked that up yet.
No, you want to?
2 hands.
Oops.
You've got Diana. Diane, yeah, I guess I'm saying that right. Up close to the top.
Got it. I'm gonna. So if you got your hand up, we're gonna shoot back to our questions now. I'm gonna unmute Diana here. Good evening, Diana. Can you hear us?
Yes, I can hear you.
Oh, great. Well, you're on the air. Everyone can hear you. Go ahead and ask your question.
I don't have a question at the moment.
Okay, perfect. Stay tuned. Thank you, Diana. And now and Rob, your hand is up as well. I'm going to unmute you. And you are unmuted now, Rob. Can you hear us okay?
Yeah, I'm right here. Can you hear me?
Yeah,
Perfect.
we sure can. You're coming in loud and clear.
Well,
You have a question or a comment?
Yeah, sure. Well, first of all, thanks for hosting this webinar. I found it very informative. I'm getting back to my original question that was actually the first question that you answered about the taxi driver.
Sure.
It's just an interesting scenario that popped up to me that prompted me to ask you about it, because I've done a lot of research on the legislation, and what I was trying to figure out is if that taxi company is using advertising revenues as a way to fund their business, right? I guess the way I felt that it was going to play out was that their business tax purchases would not be tax-free, and then they would have to, in the same way that the government entities are done that way, like the Social Security Administration and the fire department and the police department. That was what I was trying to figure out. And I say that only because if you allow the companies to not charge for their services, which means that you couldn't collect the fair tax directly that way, then you would see that transition to many companies that would want to try to do that. And so I guess what I was just trying to figure out is, like, how would you reconcile that?
I think we answered the question. The fact that it's a sale of something to the end user, that's the person who's riding the taxi, that person, the passenger, is going to be paying the fair tax. And if the business is a legitimate business, then they'll be passing that on to the state. If it's burying that, the state will catch up with that pretty quickly, because the state's having a much smaller population of businesses to administer and enforce can keep track of that much faster, much easier than the federal government, the IRS, can with the 120 plus million taxpayers that they have now.
Correct. And in my particular example that I gave, what made it a little bit more involved was that taxi company is not directly charging for their services, so there's no way particularly for them to tag on that, to collect that 23%. So my question was, how would we reconcile that? That was the question.
Okay, I see what you're saying. Or I see it more clearly. Well, okay, that's a tip is a tip, and like I did say, we don't care where the money comes from. It can be a tip. You can rob the bank. When you spend it, you'll be taxed.
Okay. Yeah, thank you.
Okay, thanks.
Thanks so much, Rob. Appreciate you.
Sure.
All right. Let's keep going here, guys. Stay with us. I am just going to make sure that I have Rob muted again in case he coughs. There we go. All right, so this next question comes in from Mark. Mark, thanks for being patient here. Mark says, I've had someone claim that they have seen economists opine that moving to a fair tax or national sales tax system would lead to a serious decline in the monetary velocity. I'm not sure what monetary velocity means, which would in turn lead to a serious economic recession and unemployment, unrest, etc. I'm not sure whether it has causes effects in the correct order. But what studies or analysis addressing monetary velocity have been done regarding the fair tax, and what were the conclusions, cautions, etc.? I'm opposed to Keynesian economics, to be sure, big fan of, etc., but I'm no economist, so I'm left stumbling for a clear understanding here. So I'm not equipped to answer that question because I don't have an understanding of monetary velocity. But Larry, is there anything in that, or is there any of our other experts on the line here that want to chime in on it? You can write in about it.
Well, I know Randy is on the line. He might be able to pick up on that, and if not, possibly Hank. Hank has got a good in-depth knowledge of finances, but I can't answer that either, Mark.
Yeah. All right, Mark, you've you've stumped the stumps here. I'm just not familiar with that term, so if you want to rephrase or send us a message offline, we'll certainly do our best to get that one answered there for you.
I would like to see where some economist has offered this opinion, where he has rendered it, and what he has to support that comment. You know, it's there is nothing that has been done. You know, we had some of the sharpest tax economists in the nation do the research before the fair tax was written, and I think they would have been aware of something of this nature if it existed, and it would have been on a paper that they presented to us, and all of their papers are on the website, on fairtax.org's website. But to me, this is just gobbledygook. Sorry.
Yeah, well.
And maybe the economist that wrote this was really
Well, Mark wrote in that he agrees it's gobbledygook.
Not Mark, but the economist that offered this might have been an off-balance psychologist.
All right, from Chad, on the prebate, what would the amount be for multiple unmarried adults living in the same household? Would each adult get the full amount for the single person? It's based on a household, Chad. I don't have the chart right up in front of me, but I believe it's the number is the number based on the number of reported adults in the household. But it only comes into one bank account. So it's based on the household, not the number of people. Each person won't be getting some divvied up check for that. Yeah.
Just had a lengthy discussion on this, Mark, with Kerry, and he led me to understand in revisiting that part of the legislation that if it's a household leader and a spouse, any additional adult that could be the only additional adults that could be on their family count would be those who are dependents or lineal I've lost the word, but they are related, lineal relations. Okay, so it'd be a grandfather, grandmother, etc., brother, sister, something like that. They could do that. No, the brother or sister could not. It would have to be a grandmother or grandfather of either spouse or a child of either spouse. If they're adults and they have some kind of a issue that prevents them from functioning as an independent adult, then they would qualify as being as part of the household. Otherwise, as an adult, they would qualify for their own tax exemption, or not tax exemption, but family consumption allowance prebate based on that particular residence. Mark?
Yep, thank you, Larry. All right, this is from Robert, Larry. He says, how is the fair tax paid in regards to independent contractors when in my situation, we handled this one from Robert. I meant this was taxi again. I wanted to get to, from Kevin. I own a small bar and restaurant. Will I have to collect from my patrons the fair tax? I have resale number for buying my goods free from sales tax. I'm a sole proprietor, so will I be taxed when I spend my money? I believe I am a retailer and would have to collect this and pay it monthly. Larry?
Yeah, who was that from? I was looking for the question. Okay, the question is, yes, if you have a retail business, you will be collecting the tax from your retail customers and submitting them to the state treasury department. That's all there is to that. Now the merchandise, the goods, whatever, services, insurance, what have you, that you purchase as part of your business, you will not pay the tax on that. You will not be liable for the tax on that because you're using it to conduct your business. The merchandise, of course, is being resold to your retail cafe, bar customers, and that you will have to collect the tax on and pay. I think that clears that, Mark.
Yeah, and Kevin, look, a lot of I'm self-employed, sole proprietor, like you, and a lot of people who I speak to in my capacity have this concern. And so, yes, when I collect my fees for my consulting and executive coaching that I do, I'll be responsible for remitting 23% of it. But people forget we're not paying any taxes on our income and on our business. So that goes away. So let's not forget that, and let's not forget that we don't have any cost to comply to the tax code. So when you take that out, it's not apples to apples, but there's a bit of a wash when it comes to what you've got to set aside from the money that you collect from your patrons. So really important to keep that in mind.
Yeah, it's also, you have to also mentally be able to separate the difference between the state sales tax that you have your exemption certificate for and the national sales tax, which the same exemption certificate will probably be amended somehow to include both taxes. But you've got the picture pretty well there.
Yeah.
And yes, you'll be taxed when you spend any money that you have, because we don't care where it comes from.
Yeah, how will the fair tax from Robert impact state income and sales tax? So if you mean state government, like state governments, how they're collecting income, it doesn't. So state income and state sales tax, no impact. The fair tax strictly operates at the federal level. However, we do believe that once the federal government moves in that direction, that it's likely state income taxes will probably be rolled back and replaced by a state sales tax or an increased state sales tax if they have both, once they see the benefits of it. All right, from Robert, different Robert. My wife and I are retired and living on Social Security and our investments. The money invested while we were working was taxed before being invested. The fair tax is implemented. Would we pay tax again on the money we invested? No. That's a big benefit, Robert. So if you've got investments where you've already paid taxes, or for that matter, haven't paid taxes on it going in, when that money comes out, there's no capital gains or any other income tax on that. So at any rate, that money isn't taxed at all. You only pay your taxes when you spend the money and you buy stuff. All right. All right, question from Randy, Larry. 45, so Randy was responding to somebody who asked a question if this, I think it was Hank. I think Hank asked the question, has anyone asked if the states will collect on behalf of the federal government? Randy writes in, 45 of them are collecting it now, so why would a state not want to get paid to collect the same tax they're already collecting? Good point. They get incentivized 0.25% of all that they collect. Thank you, Randy. From Robert, what are you doing to get the people running for president to adopt the fair tax? That's right up your alley, Larry.
Well, the question is, what are you doing? Because it is us, those people, those poor masses that we are, that they are trying to influence to vote for them. Are you asking them, why should I vote for you when you want to continue with the flat tax, which is a tax on income, and propagate what's been a 103-year failure? and let them struggle through an answer for that. But beyond that, there's not much we can do because they're going to make their own decisions, and we have to decide who we're going to vote for.
Yep. Larry, how is the fair tax different from the VAT tax used by many European countries? From Alvin.
Okay, Alvin, a VAT is a consumption tax, but the difference is the fair tax is only collected at the point of sale to the end user. That is the only place it is collected. A VAT is collected through every step of the supply chain. Everybody that touches a product, whether it's for transportation or they're adding something to it, is taxed on their purchase of that product. So the tax gets propagated through the supply chain and ends up being collected ultimately by the end user, a consumption tax. Mark?
Yeah, thank you, Larry. Larry, is Social Security taxed? No, that's income.
Absolutely
No, Robert.
correct.
Social Security.
Yeah. Today it is under the fair tax. It doesn't matter. Let me answer that question this way, as well as many others. I don't care where it comes from. Income is not taxed, period. End of story. Mark?
Yep. From William, how many members of AFFT, Americans for Fair Taxation, are currently paying the $10.40 per month? That's a great question, William. I don't know the answer to that. So what William is referring to is that you can donate regularly by being in the 1040 Club, which is paying $10.40 a month to support fair tax. I, for one, am. But I don't know. I don't have the statistics on that. I do know that, like any nonprofit organization, we need a lot more money than we're currently dealing with to put the pressure on that we want to apply. And so actually I appreciate you bringing that up, because anybody here can go to fairtax.org/1040 and just put in your credit card, $10.40 a month. If this legislation and this concept aligns for you, your $10 a month and 40 cents will make a difference. Appreciate that. All right, MJ asks, Larry, without personal information collection, i.e. your tax return, how does the government know how much prebate to send? One of the perks of the fair tax is supposed to be minimal data collection.
Okay.
I think you're just going to fill out a form, isn't that right?
Well, yeah, they do fill out a form each year or whenever there's a change in their family household status. They have to provide their legitimate address in this country. They can't reside outside, and their Social Security account. They will both be validated, and then they will qualify for the family consumption allowance, or the prebate, based on the tables that are issued every January by the Department of Health and Human Services. And from that table, there's a minor modification done to eliminate the marriage penalty, and then the amount that would be added for each additional dependent is just propagated depending on the number of dependents in that particular household, whether it be a single adult household or a dual adult household. Dual adult being two primary household winners, if you will, or leaders or workers. In other words, they're not part of the those that might be debilitated in some way. And based on that, they'll get the check from the Social Security Administration each month. It's just, they know how to do that. They send out millions every month now. So these will just be a few more that they'll get to send out. And they'll need more computing power and a few more data entry operators, but that should about take care of it. Mark?
Yeah, thank you. Kurt wrote in, this is the monetary velocity with the person who wrote in about Keynesian economics, I can't remember who it was. He wrote, opponents may use such as Keynes' paradox of thrift apparently to muddy the water. Some of them are genuinely afraid that a consumption tax means that people will stop spending money. I agree with Larry that it's hogwash. People with money spend it. Couldn't agree more. Thank you, Kurt. Should the fair tax, from Josh, be the litmus test for all candidates running for president, Congress, and Senate? Well, that's a personal question, Josh. It is for me. So I look at all the issues, and for me, fair tax and a candidate's economic position is highest on the priority list for me. And if it comes down to two people and neither are co-sponsors or saying that they're overtly saying that they will support the fair tax, then I'm going to look at the next thing on my personal priority list. But for me, that is the litmus test.
Absolutely.
From Kevin, if an employee gets to keep 100% of their paycheck, how is their Social Security figured out when they're ready to retire? Larry?
Yes. If you are a W-2 worker, every year your employer or employers will submit to the Social Security Administration your gross wages, and that's it. And that's used so that the Social Security Administration can calculate your benefit when you're due to receive it. If you are not a W-2 worker and you are self-employed, in other words, then you would be required to submit your gross wages. And I'm not sure how they are going to require you to submit it. That'll be done by the regulations that are written in support of the legislation. The legislation tells us what they want done, and the regulations tell us how to do it. So that's something that will be done in that phase of the implementation. But once again, it's simply a matter of gross wage reports going to the Social Security Administration. Mark?
Yep, great. By the way, Kurt wrote in, thank you, Kurt. Please make clear the prebate is optional. No one is required to provide the information to the government. You don't have to get that money if you don't want it, but most would want to. There was a question about the insurance premium, and Rob wrote in, he's researched some things, and I'm going to share what he wrote. Insurance premiums have two components. One, dollars paid back as claims, and two, dollars kept or what is paid for the service of insuring the policyholder. Fair tax is paid on the purchase of the service, but not on the dollars paid back for claims. This applies to all types of insurance. Great. Thank you, Rob. And Hank makes a comment. States will want to collect because H.R. 25, the fair tax legislation, proposes that the federal government tax all state and local government consumption. All state governors oppose any sort of a national consumption tax. I don't know if that's true. You know if that's true?
I've only heard that from Hank. And first place, the premise is incorrect, that the fair tax taxes all state government products and services. Depending on what the department is, if it is providing a legitimate service to the public, such as the post office from the federal government does to the public, then that is a special entity within the government structure. They will be required to collect the sales tax from their customers. So if the state, for example, and this is not the best example, but I think you can follow it in the analogy. If the state is providing trash collection services, the Department of Trash Collection will have the fair tax embedded in their cost of that service, and they will remit it to the state for processing, who will in turn then remit it to the federal Treasury Department. So I don't know what the breakdown is within every state, because of course they're different, but it is important that you separate what kind of function the state's departments are performing as to whether or not they are required to pay or collect the sales tax. Now, you got to also remember, Hank, that today, even the State Department employees, I'm talking about a state's department employees, are paying or having Social Security and Medicare taxes withheld, and they're paying a federal sales withholding tax. I mean, those aren't going to be collected any longer. So all of those employees are now taking home their entire paycheck also. For the federal government not to tax those businesses that are no longer, even the state, that are no longer paying those premiums would be putting the states at an unfair advantage over private industry. And so just like it rides with the federal government for the same reasons, it is to keep the government agencies on the same playing field as private industry agencies and not give them an advantage because they have all of the benefits of no federal taxes, but then if they were not to have to pay the fair tax, that would be very poor balancing of the economy. Mark?
Yeah. All right. I want to take a moment. We're well past our time, and I appreciate people for staying on here. Oops, let me go back here. You guys have been great tonight. You've asked some great questions, and I love the debate too. Like, hey, you know, we're talking about revamping the way our government collects trillions of dollars, right? So the fair tax, I believe, is the best thing I've ever seen to make that a simple, fair, and transparent process. And there may be some components that need to be debated and upgraded. So I love it. And for me, it is the legislation. It is the process that offers the most fertile economic environment for businesses and individuals to thrive. I've studied it backwards and forwards, and that's what I believe. And now we pose that question to you. Is it better, much better than what we've got? And if you say yes, then do something about it. Devote some time and some money to seeing this thing move forward. And one of the best ways you could do that is bring a friend, come back to the webinar on the fourth Thursday of each month. Find your local coordinator by going to fairtax.org, grassroots, and you know, get involved and get educated. And then just refer people to this webinar to get them educated. You don't even have to do it yourself. But as you all know, I think you're here because you're concerned citizens, and we honor you and respect you for that. And thank you for your time here tonight. You know, this country is in an interesting spot in terms of the way it's going to go. And the fair tax really, in my opinion, represents some fundamental ways that this country was meant to be operated by its founders. And certainly freeing up the markets is one way that it does that, outside the burden of income taxation. So there's just a lot of great benefits. And look, cut it all out. Like, if the only thing you take away from tonight is the fact that every individual, and I've looked at individuals, especially those self-employed, retired, lower income class Americans, every group, every business, is in a better financial place, dollar for dollar, than under our current tax system. So with that being said, if it aligns for you, get involved, do something, come back, bring somebody next month, and consider making your vote count only for someone who's going to support the fair tax. So I really want to thank the people that help put it in this event on every month. There's a lot of great people working behind the scenes to bring you all to this event, and I thank them. I thank my colleague Larry for his great wisdom, And I wish you all a very safe and pleasant evening, and we really hope to see you next month. Take care, everyone.